What's up, everybody? Rob here. Thank you so much for tuning in. We are nearly at 400 subscribers on the channel. That's crazy to me. I know there's channels with like thousands and thousands of subscribers and hundreds of thousands, millions of subscribers, but I started this channel a month ago. I started it on July 2nd. Today's August 2nd. So in exactly a month, we are nearly at 400 subscribers. That's almost 100 subscribers per week. So that's crazy to me. I'm extremely humbled by it. I've had people I don't even know reposting my videos and sharing them on social media, and I've gotten such great response from all of this. I just had a lot on my mind during this pandemic, and I said, you know what? I'm going to put together a little studio in the warehouse, and I'm going to buy this little Joe Rogan mic and go to town. This is a Shure mic, but I call it the Joe Rogan mic. Anyways, thank you so much for being part of the channel. You specifically watching this video, thank you. I really appreciate it. That being said, let's talk about the stock market versus precious metals. That's what this video is all about. And you might be surprised what my answer is, especially knowing that I am a precious metals bull. Before I get further into this video, I have to say that I am not a financial advisor. Nothing I say is to be taken as advice. This is simply for entertainment, education purposes, not to be taken as advice, as I am not an advisor in any way, shape, or form. Disclaimer. With the stock market and precious metals, we're in a very unique time right now, and I wanted to share my perspective because I think there's a lot of things that are being overlooked. We have silver breaking out, jumping over 20, sitting over 24 an ounce and change right now. You have the stock market in a supposed V-shaped recovery from the bottom from when the pandemic first started until now. We have this crazy recovery happening in the stock market, and everyone's getting that FOMO. You know, everyone's got that fear of missing out and going, am I missing out? You know, should I be in metals right now? Or I've missed out on Apple just jumping up like crazy. That gain on Apple is just intense. When you know how big of a market cap Apple is, for it to be jumping like hundreds of billions of dollars in market cap like this is just mind-boggling. We're seeing this huge divide in the stock market that is very relative to the divide among the citizens when it comes to wealth. We have this huge wealth gap where we have this chart where it's just a slanted U where the top 1% has the majority of the money in the world by a landslide. And now in the stock market, we have a situation where the tech stocks have the majority of the money in the stock market, where the smaller stocks are very much so in jeopardy right now. The divide is crazy on tech versus like the brick and mortar companies and kind of the smaller stocks in the arena. So what's going to happen? What's my opinion? Everything here is my opinion. I don't have a crystal ball to pull out underneath this desk. All we can do is develop a thesis. This is my opinion and my thesis on the matter. The Fed is not somebody that we want to bet against. If you see this, I actually put that up there. A book to buy, not just watching me, but a book to buy is Modern Money Mechanics. That will teach you everything about fractional reserve banking and how the banking system operates in the United States. Very, very, very important book to own. Just throwing that out there. The reason I bring that up and the reason I bring up fractional reserve banking is because every dollar that the Fed is printing right now, which is trillions and trillions and trillions and trillions and trillions of dollars, is being multiplied by the commercial banks through loans. Now they don't even have to hold 10% in the vault anymore. If you don't know about fractional reserve banking, at the end of this video, I will post a clip that you can just click on and it'll take you to my fractional reserve banking, or you can go to the Future of Money playlist on the channel. If you go to my YouTube channel, check out that video on fractional reserve banking. It's worth your while. It's worth your while. And that book's very much so worth your while. I have nothing to do with that book. because all of this money is being amplified and multiplied, what everyone needs to understand, and this is some information I really want to get out to you, because if you know me and you know all of my videos on this channel, I don't like to make filler content. I don't like to make content that isn't valuable and doesn't give you any deeper understanding of what's going on right now. So we need to know that silver is not going up in price. And a lot of you might hear that and be like, yeah, it went up a lot in price. And by the way, sorry for my OCD going in different, is that OCD or ADD? I got it all, but I'm going in different categories. But nobody's talking about silver. Nobody's talking about it. They're talking about the V-shaped recovery, the stock market, V-shaped recovery. Silver fell to under 12 an ounce, and it's at over 24. It's had 100% from its bottom. CNBC, you guys want to throw silver a bone, or are you guys nervous? Like, what's going on? Nobody wants to talk about silver. They'll talk about gold. By the way, gold's at an all-time high, and on to the next thing, but nothing about silver. Anyway, silver's not going up in value. Gold's not going up in value. Platinum's not going up in value. The dollar is losing its buying power because they have printed so much of this. And I'm going to go more into detail. But in summary, it's taking $2 to buy everything that $1 used to buy. And that's just a dramatic, rough estimate. But it's going to eventually become like that. It's going to make it so that the dollar is extremely diluted. So just remember, it's not that our metals are going up in value, and it's not that the stock market is recovering. It's that it's taking more dollars to buy things. The real tax and the real entrapment on our citizens is the fact that inflation is growing at unprecedented levels. And you might not notice it right now. Gas might be the same price right now. Things might be relatively stable, but soon you will see the price of our food going up. You will see the price of everything going up because of how many dollars have been printed. And if you don't believe me, the dollar has lost 98% plus of its buying power in the last 100 years. That's a real statistic. It's crazy to think about. Now that we have that out of the way, that we know that our assets are not going up in value, it's just taking more fiat currency to buy our assets that are more finite than the money that Powell can just poof into thin air. That's the situation that we're in. I really want to stress that. And that makes me so much more comfortable to hold precious metals as an insurance investment. That's what I consider precious metals. Everybody goes, it's insurance, it's an investment. Let's just call it both. Let's just call it what it really is. It's an insurance investment because it could go up. I'm going to be contradictory. We're saying it goes up in value, but it just holds its value against hyperinflation. Precious metals has always been a hedge against hyperinflation. So this video is not only about precious metals, it's also about the stock market. The unique factor that I wanted to get across in this video is that I am actually somewhat bullish on the stock market. And I know a lot of people are like, that's crazy. You think it's going to crash. The more I think about it and the more time I put into this, there will be certain companies, like I am short a gym stock right now that I think is wildly overvalued, and I'm already up about 85% on my put options. Maybe I'll eventually start talking about stuff like that on this page on what I'm doing in my trading, but I am short a gym stock. If you do some research, I'm sure you might be able to find this overvalued gym stock, and I am short a movie stock. So there's a couple stocks that I'm short on, and I know that they're not going to be in too great of a place coming into their earnings reports. But the tech companies are blowing up through the roof. Amazon, Apple. I'm pretty tech savvy, but I've been using Amazon like crazy lately. I don't know about you. I'm getting much better at buying my goods online. And I'm actually starting to realize, I'm like, wow, I used to drive to Walmart to buy these bubble mailers, and I got these for like literally 75% less, nicer ones from Amazon, and they're delivered to my door. So like these, if I'm seeing that, I'm sure a lot more people are seeing that. So there are companies that are benefiting from this pandemic. Example, Amazon. Example, Apple. We are all still using our iPhones, if not a lot more. Got to remember, they own the App Store. Everything you buy in the App Store, they not only own the hardware, but they also own the software. So there are companies that are holding up this market. And then on top of that, the Fed is printing at unprecedented levels. So it's not that the stock market is going to all-time highs and has this V-shaped recovery. It's that our dollars are diluted. It's taking more dollars to buy Apple stock. So these assets, so to speak, are trading in fiat currency that is being diluted. So if you priced the stock market, and this is my next point I wanted to get into, if you price the stock market in real money, if you price the stock market in gold and silver, which was real money all the way up until 1971, this wasn't that long ago. It wasn't that long ago. We're talking 50 years ago. The stocks used to be valued in gold technically because the dollar was backed to gold. You see where I'm going here? Now that they're printing this money at unprecedented rates, it's artificially holding up the stock market. And because the banks give us no interest on our money, the only way to beat inflation is to either invest in yourself and make a business or invest in the stock market. You don't really have many options. You can get into real estate, but real estate's a little iffy right now, especially commercial real estate. So the options are very limited. So when you're printing trillions and trillions of dollars, I want to call it a funnel, but it goes down a funnel to the commercial banks, then goes through fractional reserve banking, which is why I said to read that book and to watch my fractional reserve banking video. But then it's amplified. So it's not really a funnel. It's like a funnel to like a huge amplification of this money. And then it's just multiplied. The commercial banks print more money than the Fed. I'll repeat that. The commercial banks make more money, artificially inject more money than the Feds do through fractional reserve banking. And that's just a mind blast. You just when you realize that, you go, everybody's so caught up on like, oh, you know, the Fed's printed 5, 6 trillion, 7 trillion, 8 trillion, just going through the roof. I remember when people were saying, oh, the deficit's at 19K, that's crazy. And now we're just blowing past 26 trillion to 27 trillion, 28, 29, 30 trillion. It's like the printing is crazy. And the people my age, you know, the millennials, are so happy to take in this $1,200 check. So happy about it. You don't know that inflation is going to take that $1,200 check out of your pocket times like 10 in the future. The real tax is inflation, and it's hidden, and not everybody knows about it. The price of goods going up year after year after year based on all of this crazy spending by a government that, you know, is just doing everything in its power, throwing Hail Marys left and right to hold up our stock market. So how do I summarize everything I just talked about? I know I go on crazy rants. I'm very passionate about this subject, as you can tell. The analogy I would use, and I've said this before, is Powell and the Fed are giving out free lemons right now. They're coming all of a sudden, here's lemons, lemons for you, lemons for you, lemons for you. Free lemons for everybody. The goal is to take these lemons, and lemons, they rot pretty quick as a fruit, as you know. If you keep them together, they get mold on them pretty quick. The goal is to take these lemons and turn them into lemonade before they rot. So while they're printing this money and bringing all this money into the system, those of you that were smart enough to buy the stock market at its low, I got the tail end of that. I didn't call the bottom myself. I was panicking. I'm going, oh my God, I can't believe it just fell, you know, down to like 12, what was it? Fell down to like 12,000 on the Dow, 14,000 on the Dow. Don't quote me on that. The crazy drop from all-time highs down. I think it might have been like 18,000 on the Dow. I have to double check on that. But the crash was so crazy that I didn't know what to do at the time. I'm going, should I go short? Should I sit back and watch the market? Personally, I just kept buying precious metals and stuck to my business. I stuck to mineral exchange and just did my business, made sure that our wholesale metals were getting out the door. That's what I was focused on. But I miss that gain, that crazy gain. And I have a couple friends that sold out of all of their assets and went big in the market and hit a home run. Now, they made a lot of lemonade. The goal is to now take that and put it into safe places. You know, they took all those lemons and now it's like, okay, where do we put this? That's what I want to get out there into the world. Protect yourself. The stock market might actually even get to all-time highs. And to think about that during a pandemic, for the stock market to go to all-time highs, excuse me, is that realistic? Like, really, is that realistic? With everything going on, all the businesses shut down, all the suffering going on, should the stock market be nearing all-time highs? If the money was priced in real money, like it used to be prior to 1971, we'd be seeing a much different story. And that's what makes me sick every time I hear people go, oh, well, the stock market's outperformed gold. Gold didn't perform nearly as well as the stock market. But they don't realize that the stock market used to be priced in gold. I'll repeat that. The stock market used to be priced in gold. The dollar was backed to gold and silver prior to 1971. You're trading with dollars in the stock market. You're buying stocks with dollars that used to be backed to real money. It's not like that anymore, and they're inflating it. So you're using fiat money to buy the stocks that used to be bought in gold and silver. If you were buying it with real money, the stock market would not be performing nearly the way it is. So understand that inflation is happening. Understand that dilution of the dollar is happening. If you've been watching the dollar, it's looking scary right now. It's losing a lot of its purchasing power. And this isn't like rocket science. History repeats itself. The dollar has lost 98% of its value since 100 years ago. So today, it's like to think about, okay, well, it's already lost 98% of its purchasing power. And on top of it, they're printing at an unprecedented rate. I mean, from 20 trillion to 27 trillion, lickety split. Like 7 trillion is nothing. And now proposing another 2, 3, 4 trillion. It's crazy. It's crazy. So what's my play? You stuck through this video all this way. I know that sometimes I ramble and my videos might be a little bit of a while, but like I've said before, I hope that there's some information here that makes it worth your while to actually watch through these videos, and I hope it provides you value. So with that being said, my play on it is I am actually long a few stocks in the stock market. I'm not going to say the exact stocks because I need to figure out if I'm allowed to do that or not. I think I am allowed to because I've seen some other stock trading channels, but I don't know if I need to write a certain disclaimer or something other than just saying it in the video. So eventually in the future on this channel, if you subscribe, you know, what's that called? You know, let's just inject that in there. You know, if you subscribe, you click that red subscribe button and you hit a thumbs up, you know, you will find out more about that. I guess after you subscribe, if you click that little bell after you subscribe, it will then notify you of all future videos. And I will be getting much more into detail on my personal investments in the future, other than just my investments in precious metals, which you can obviously see. What's my play on the stock market? I am short brick and mortar companies. I am short, and this is me taking all emotions out of it. I'm just in it specifically to make money. And I know some people might not see that in a positive light, but I hope me sharing that information helps some people and gets you out of those positions that I think might go down. You got to, at the end of the day, it's your choice, whatever you do. This is just what I'm doing. I am short brick and mortar because they are very much so suffering. Commercial real estate is going to be suffering quite a bit. I don't know enough about residential real estate. It might survive okay, but I believe commercial real estate, specifically malls, got to remember, if you're shut down like this and nobody's going to the stores, you know, and they don't have that much of an online presence, the the landlord isn't exactly saying you don't need to pay me. If you haven't paid yet, those are just accruing debt. So some of these companies are 3-4 months of unpaid rent. If you're looking at it from an executive decision, it'd be a better idea to go bankrupt than to pay that debt. As a company, I mean, just making an executive decision as a CEO, as a CFO of these companies, it doesn't make sense to pay 4 months of high cost rent versus just going bankrupt out of it. And we've already seen that. We saw JCPenney went bankrupt, J. Crew, the Pier 11 or Pier something went bankrupt. You got bankruptcy after bank. All the gyms, I believe these were privately traded, but Gold's Gym went bankrupt. 24 Hour Fitness went bankrupt, which is why you might know why I'm short a certain gym. And I've made some money on that one. That one's done extremely well because put options are, if you know about options contracts, you can make more percentages than just the stock market percentage going down if you're right about a put option. That's something I might get into more detail in the future. Anyway, I'm short certain companies in the stock market and I'm long tech in the stock market. I don't see Apple and Netflix and Facebook and Amazon not benefiting from this situation that we're in. And I see a lot of fake money being printed and funneled into this market and amplified by the commercial banks. And I see not very many options for the general public to put this newfound money other than the stock market. So I see a lot of it being just pushed right into the market. And going into a new election, I just feel like there is no way the Fed isn't going to do everything in its power to hold up this market. So the certain companies that benefited from this situation, you know, you look at Tesla just blowing up to all-time highs. I think it's on a recent pullback, which might provide a little bit of an opportunity here. These companies benefited from this because they do all their sales online. Tesla, for example, has no dealerships. You only can buy the car online. That's a huge benefit for them comparatively to all the people that were dealership based, you know, and to the owners. The owners get to know nobody sat in this car. Nobody test drove this car. This thing just went straight to me. You know, looking at companies from that perspective, did they benefit from this pandemic? And it's hard to say that. I know I'm just taking emotion out of it, but there were companies that benefited. Look at Amazon. I'm ordering way more than I ever did on Amazon in the past. And I'm sure there are many other people out there that are ordering much more from Amazon than they used to. I'm bullish on certain parts of the market, and I am not short the overall market. I am not short the Dow. I am not short the S&P. I am not short NASDAQ. I am specifically only shorting certain companies that I know are in a very bad position, and I am long companies that I know are in a very good position because I know that the divide is happening. The money is being taken out of these small cap stocks and funneled into the tech stocks. The stocks that are benefiting, it's like if you saw the divide, it's crazy. Apple going up to it's going to be the first company with a $2 trillion valuation. That's just like, what? What? And it's only because they're printing so much of this money. Now, if they weren't printing this much money, I would be saying I am the biggest bear ever. I am the biggest bear ever. But right now, I am long certain companies in the market that are benefiting from the situation, and I am short certain companies that are not benefiting. But the overall markets, I think, hold, you know, by the skin of their teeth or continue to go up a bit based on how much is being printed. And this is only because we're buying stocks not with real money, but with fiat currency that's backed to nothing but debt. That's the only reason. Now, let's get to precious metals a little bit. What happens with precious metals in a stock market that goes up? Well, what we're seeing recently is silver going, you know, having 6-7% days and holding its gain over 24, and it's outperforming the market. If we see that detachment where the market is just slowly going up, but then silver and gold are detaching and going up higher while the market is holding its weight, that's best case scenario for precious metals fans and stackers like us. That's best case scenario. Get out of your mind that a crash in the market is going to prop your metals up in value. It's not. If the market crashed, there would be a ton of margin calls and silver and gold would drop with it. So if the market crashed right now, it wouldn't be a good situation. It'd be a buying opportunity for those in precious metals, because 2-3 years down the line, we'd see that crazy recovery that we saw in 2011 from the 2007 and 8 collapse. So that's another strategy. If that does happen and you have some powder dry, you have some extra capital, be ready. If there was a collapse, it would bring down silver and gold. But I don't think that happens personally. This is my personal opinion. I think that we're seeing a detachment. We're seeing silver and gold going up in value, and it's outpacing the market. That's the best case scenario, like I just said, because silver could race over 30 an ounce, 40, 50 an ounce. And when that pullback happens, it only falls maybe $10. So if we see silver get up to 50 an ounce, where it should be right now, if gold's at all-time highs, I don't see silver being so low. If you haven't watched my videos on silver, please go to the Future of Money playlist. But if we see the market continuing to perform like this, that is best case scenario for the metals, because we will detach and continue to grow and grow in value, because all of the money being printed, it's taking more dollars to buy our silver. It's taking more dollars to buy our gold. The mint is constrained like crazy in the US. That's another thing. The mines are suffering. This is a limited good, and their dollars are being printed out of thin air, whereas mining, it's becoming increasingly difficult. So we might see a crazy spike. That's why there was another video out there, and this was my last video I just made, with YouTubers saying, oh, wait for the perfect opportunity. Do not wait for, I can't say like definitively, but I am not personally waiting. I am consistently buying, because that opportunity that they're talking about, silver might go from 30 to 25 and you're just sitting at the same level, except for more premiums based on the drop. That's another thing most people don't take into account. When metals drop, like when silver was 12 an ounce, it was really trading for like 16 an ounce through dealers, because you couldn't get it. There wasn't any of it out there. Nobody wanted to sell. So waiting for a drop is a bad strategy. Buying consistently with 20% capital ready to go at any given time, that's a good strategy in my opinion. So if the market continues to perform like this, I think that the best thing you can do is, when you have a big gain in the stock market, take some of those lemons that Powell's giving you through injecting a bunch of money in the system and make lemonade. Protect yourself. Take your profits and build yourself a good business. Figure out, you could start a clothing company business. You could start some sort of online e-commerce thing. If you have an idea, right now is the time to put yourself to it. Look at this set here. This is something that was my idea. I said, you know what? I'm investing in this microphone, this little boom handle. I'm investing in a camera. I'm investing in the software to do this, the lighting, all this stuff. That was my choice in this pandemic, because I have so much on my mind and I've always wanted to do this. Take those lemons and make lemonade with it before they go rotten, because the dollar could easily crash. That's what I think is much more possible than predicting a stock market collapse. The dollar collapse, of it being extremely diluted and being artificially propped up and multiplied by the commercial banks, that's what's on my mind. And also, I was going to talk about the stimulus package, but I'm not going to get too much into that. It just makes me sick, all these YouTubers, I get recommended stimulus package update, stimulus package update, stimulus package update, with YouTubers benefiting from this and putting content out on this, when realistically, it's damaging the average citizen. The inflation you're going to accrue and the siphoning of this money, it's getting siphoned to corporations and things that don't need this money. If you got the actual amount per citizen for the amount that they're printing, we'll be talking like 20,000 plus per citizen. But the problem is, this money's getting siphoned and pushed away. You never want to trust them dispersing this money. Excuse me. It just makes me sick seeing, Americans suffering, YouTubers benefiting by, there's this one guy, I think, what's his name, like Clear Value or something, I don't know, but he's just, every video he posts, stimulus package, stimulus package, stimulus package, stimulus package, just benefiting from American suffering. I would rather give out the real information. I would rather give out information that is beneficial based on what the damage that is going to, I mean, if you see Elon Musk, and he might not be the perfect guy to say this because he did get some incentives here and there. That's kind of another subject for debate. But if the guy re-landing rockets, the face behind Tesla, you know, probably one of the best geniuses of our time and maybe for the next 100 years, is saying, hey, I think it's a bad idea to trust the government doing the stimulus package. I don't think it's in the people's best interest. You might want to listen to the guy. Kind of relands rockets and stuff, you know. I mean, might be a good idea to listen to him. I know $1,200 sounds great, but all of the goods that you buy with that $1,200 doubling in cost doesn't sound so great. The real tax is inflation. It's not income tax. It's inflation. And it's happening every single day. And my thesis is that it's going to grow at rapid hyperinflation in the near future. So what do? We take the free lemons. We keep our money in certain stocks in the stock market because it's probably going to get artificially propped up and continue to grow. And take the profits and put it into lemonade. Put it into your own business. Store it in precious metals. Buy things. I think Bitcoin is still continuing to go on its way up. Bitcoin is one of those anomalies that I can't pin it down. So I always just say I'm putting 5 to 10% of my net worth in Bitcoin, and it's an insurance play. Because if it works out, everything else crumbles. And you'll be looking like a genius because Bitcoin could be worth millions of coins and it will protect you against everything else crumbling. I believe gold and silver will still hold their value and we might be buying gold and silver with something different than $1 in the future. I don't know this, but I am preparing for all different theses playing out. Anyways, this is a super long video. It's over 30 minutes. If you've watched this all the way through, thank you so much for being here and being part of the almost 400 subscribers on this channel. It's blowing my mind that there are nearly 400 people here. So thank you for being here. Thank you for watching and listening to my crazy self-ramble. I hope that there was some good information in this. When I say stock market versus precious metals, I'm in a weird position where I don't think the stock market will collapse based on how much money is being printed. It's artificially propping it up while the dollar is devaluing. So I am just putting my money into my business. I'm putting my profits, so to speak, into silver and gold. I made quite a bit on Tesla stock. I made quite a bit on some other plays earlier, and I'm making a good amount on my short plays right now. And I'm taking those profits out and I'm storing those and I'm holding them. I'm holding some money, about 20 to 25% liquid, for opportunities in the silver and gold market, for opportunities in the stock market as well. That's my thesis, and I hope it makes a bit of sense. But just know that everyone talking about, oh, the stock market only goes up, it only goes up. Well, it only goes up because we're trading in highly inflated money, highly diluted dollars. That's why it's performed the way that it has since 1971. It's not trading in real money anymore. Thanks again for being a subscriber here and watching all the way through. I will see you at the next video. Signing out.